Kia ora everyone, welcome back to our next edition of Econ Talks. Gareth, we've been thinking about trade for quite a while. Of course, the last couple of years being pretty topsy-turvy for the New Zealand trade picture, doing well in some areas, seeing a pullback in more recent times. We've got the latest terms of trade data. What's the latest on the trade front?
Yeah, so terms of trade for the June quarter up around about 2% from where it was. That's the second quarterly rise we've had in a row rather. And we saw both export and import prices rising over the latest quarter. The terms of trade, the index itself is still not at a great level. It got hammered quite hard in the final quarter of 2023 when there was a lot of export price weakness at the same time as import prices sort of were bouncing up with international oil prices and various other factors as well. But it has recovered most of those sort of losses that it recorded late in 2023. So getting back to close to sort of an average level for what we've seen over the last 10 years. So that's good in terms of sort of export revenues and the amount of imports that we can buy with what we're exporting. There has been a lift there. Now, we've also had some other data coming through more recently in terms of commodity prices for the stuff that we export from ANZ. And their indices have been showing pretty consistently over the last 9 to 12 months or so, a gradual improvement coming through in some of those export prices, particularly around dairy prices. They've been trending up and continuing to do so in the latest month. And also meat prices have been picking up after being quite weak late last year and in early 2024 as well. Of course, both of those indices, they fell quite a long way through 2022 and 2023. So they're not back at fantastic levels, but it is important. I mean, we were looking at the numbers late last year and going, wow, this is going to be tough for the rural sector, the agricultural sector over the next couple of years. And conditions are still relatively tough, but at least there is a bit of, light on the horizon in terms of where those prices, where that revenue is going, not so much immediately, but you look forward out into 2025 and things are on the improve. You know, one of the key signs of that, I think, is the last couple of weeks, Fonterra have revised up their payout for the current season. It was sitting at around $8 and I think now up to $8.50. So that's in the sort of territory where dairy farmers will be running profitably. It's not a huge profit margin, but it is well back in that positive territory. So there's just signs on that price side that the export picture is brightening.
Yeah, you're definitely right there. And I mean, sticking with the dairy theme, of course, you're seeing, like you say, those higher prices that have been coming forward. Global dairy trade auction in a much stronger position. A few sort of little dips every now and then, but in general form, trending up in a pretty strong direction. It seems like, look, global dairy supplies into the market sort of not quite as strong as before. Demand strengthening, not sort of super strong again yet, but all of that helping. And at the same time, of course, you've got those are revenue numbers that will be boosted up by higher prices. At the same time, your on-farm costs have stabilised a lot more the last 9 months. And of course, with interest rates starting to trend down, that'll provide a little bit more relief on the cost side for the primary sector. And so you do sort of get that feeling that sort of profit margin is opening up a touch more, at least in the dairy sector. If we look as well at horticulture, better things coming through there as well. A nearly 19% increase, I think, in the volume of fruit that New Zealand exported in the second quarter. So again, encouraging in terms of what we're getting out there. Kiwi fruit had its strongest start to the season ever. Numbers looking a lot better there after a sort of a tough 1 to 2 years in the last couple of seasons. You had frosts that massively hit production volumes and yields. Then you had Cyclone Gabrielle that came through and some of the disruptions that came through in those areas, fruit quality issues and what have you. Apples again doing better coming off from Cyclone Gabrielle a year before. So all of that quite encouraging. I think it's the meat and the forestry areas that are still causing a lot of concern for the likes of sheep and beef. We've seen beef prices actually come back in a pretty solid direction, and certainly volumes going into the US are in a good place. Part of that is replacing American beef that just isn't as available. I think their herd is at the lowest in something like 70 years. So again, a real good opportunity that New Zealand is able to take a bit of advantage of. But on the sort of sheep meat side, lamb, mutton, really really not doing it all that well. And I think the challenge, looking through the numbers, I was picking up a bit of an increase the last couple of weeks, last 2 months in sheep meat prices and going, hey, this is surely an encouraging story, only to find that the reason for those higher prices are because there's not that much volume coming through to the meatworks, which means that the meatworks are trying to pay more to make sure they're actually running at sort of a decent pace. So that means, again, higher price but multiplied by lower volume really isn't doing well still on that sort of sheep side of the sheep and beef. Forestry still appears pretty dismal. About half of it, I think, goes to China. Just not a lot of additional action coming out of there. And so definitely looking at forestry prices, especially on an inflation-adjusted basis, not a lot going through. And you're seeing that coming through, right, with the likes of the closure of the 2 mills in Ruapehu district. Again, not a lot of money to be made. And at the same time, higher costs from energy and electricity. So, yeah, a mixed bag, I think, on the primary sector front. You're right that, there has been a bit of an improvement the last 2 quarters. That's definitely encouraging, but it's not like the primary sector is away and humming at the moment. I mean, looking out into the future, we look at global growth all the time. We look at, how New Zealand's production is going. Any thoughts on sort of where that global growth means, or what it means rather, for global Kiwi exporters into the future?
Well, I think looking at the global sort of economic situation over the last 6 to 8 weeks, there has been a bit of volatility and expectations around particularly the American economy and how soft the landing there is going to be, when the Fed cuts rates and how quickly they do, and how much of a support that is for American economic growth heading into 2025. So just a little bit of uncertainty hanging over that. You also factor in the election in America coming up later this year, and Trump's statement that he's going to slap a 10% tariff on everything that goes into America, and that could undo a lot of the sort of gains that we've made in terms of exporting to America over the last few years, which have been pretty considerable when you look at the numbers as well. So I'd still be a little bit uncertain or a little bit cautious, I think, about sort of prospects for global growth. Certainly we're not getting any signs out of China, as you mentioned, with relation to forestry. And its broader growth pattern, that there's much of an improvement or pickup or acceleration coming through there as well. So, yeah, signs of a little bit of a better on the price side, but it's hard to see that, accelerating a great deal more, I think, into 2025, unless there's maybe something on the supply side that's, limiting, like you say, with American beef as an example, limiting the supply elsewhere that may otherwise drive the price up. So it's probably a bit of a steady as she goes picture for exporters, better than 6, 9, 12 months ago, but not necessarily roaring away from here with that global growth context.
Definitely, and I think that's sort of, a bit of a code for how the rest of the economy is going as well. Times ahead are unlikely to be as bad as what they have been, 6, 9 months ago, but equally not sort of in a roaring economic position where everything is sort of just going absolute flat sticks. We'll continue to assess how the global economy evolves and what that means for our exporters and the different parts of our export sector on one of our future editions of Econ Talks.